What's going on, good people? Welcome back to another episode of Trading My Live Account. Today is day number 54. It's August the 25th, 2023. We made some trades today, so let's get into it. First and foremost, before we even talk about the important levels, let's talk about the type of market environment that we were trading in today. So coming into today, I think yesterday was very interesting because volatility was off the charts on Wednesday and Thursday. And then we came into today, we had the consumer sentiment report come out at 10 o'clock, as well as the Federal Reserve Chair Jerome Powell speaking at 10:05. So when you add that in combination to what's already been going on this week, it's no surprise that we should expect a lot of volatility. So whenever you trade in a very volatile market, you have to make sure that your trades are going to be on point and they have to be on target. So you have to make sure that you literally follow your trading plan to the T, cross every T and dot all of your I's, and make sure everything that you do is perfectly synchronized with your trading plan, and you should be good. So just to set the tone for what kind of market environment we're trading in, I just needed to say that. So let's go ahead and talk about the important levels that we have on our chart today. So we have yesterday's closing price down here at 34,131, and that would pretty much play a significantly major role in today's session. So let's go ahead and get into it and let's talk about it. So let's start from over here at the open at 9:30. So as soon as the market opened, we had a strong rally to the upside, came all the way back up to 34,360. But from that point, we did form a lower high, and then we just continued moving down throughout this entire swing. So once we finally established a swing low right here at this one specific candle, once we wicked up, I use that as a swing low in my opinion, because sometimes in a move like this where it's all red candles, you won't have a clearly obvious green candle to just short from and call that the swing low. But what you can do is use a wick that closes extremely well, use a candle that has a wick where prices close extremely far away from that wick. So a good example would be this candle right here. Notice how this candle started at about 300 and you know what, let's go to the live chart. Okay, so let's bring it up. So this candle started, it opened at 334, had a low of 307, right? But it closed at 329. So it closed 22 points away from the close of the candle. Well, the low of the candle. So to me, that represents a pullback. So in scenarios like this where the market is just moving down so strongly, you got to use those long tail candle wicks as your actual pullback point. So that's pretty much the mindset I had on trade one. And once prices pulled back into that level, I shorted and then took it back down to my scalp target a little bit lower. Now on this particular trade, I think I got really lucky because let's see, I got out at, well, I shorted at 281 and I got out at 260. The low for this candle was 260. So really kind of cut it close on that trade, but sometimes in the market it'll just play out like that in your favor. So glad I was able to take a profit on that trade and not have it come back to break even. So we eventually see prices come back and actually retest that level that we were just talking about from that long tail candle wick where we saw the demand come in for the first time. So it makes sense that during the downtrend, prices should come back up, retest those levels of major resistance that used to be previous demand areas, and then we should see the downtrend continue. And that's exactly what we were able to see today. So once we sold off from that level, we see prices come back down, create a lower high, which makes sense. And if you look at it, it lines up with what used to be a previous swing point. So everything is lining up and making sense. The downtrend is pretty legit right here. So after I took trade one, I was kind of just chilling. I saw a lot of my setup starting to form. I saw the higher low setup right here where once you get this higher low, you can go long right here. Now, if I would have took this long trade, would have got stopped out. But as soon as prices spike back to your entry price, you take that trade again. So I would have been able to be net profitable within this entire junction if I would have traded. But because I knew that the consumer sentiment number was coming out at 10 o'clock, as well as Jerome Powell talking at 10:05, I just felt like it made more sense to just wait for all of that news to come out. And then if the market continues to do what it's been doing, we can still always continue to participate in that downtrend, but we want to make sure that nothing crazy happens first. So I just let all of the news play out, and then once we finally started moving, I tried to catch this trade right here as prices came back from this wick after this large candle to the upside. Because once we had this higher low established, you know me, once I see a higher low, I change my bias and I'm like, okay, we need to start thinking about longs. So I said, okay, after we had a push up this far, I highly doubt that we're just coming right back down. If we do, I can trade that too. But more than likely, we should probably come back and test somewhere inside of the zone. So I said, if this was the previous swing high, we should come back and retest that level a little bit. Now, I believe the high for that candle was 63. Yes, this candle, the high was 63, 263. So I was expecting for this next candle right here to come back and retest that level. So I was like, okay, if the level was 263, let me put my order at 262 just to play it safe. But it ended up coming all the way back to 263 and then moving on without me. So sometimes it's like that in the market. But I think the great thing about this particular day was that even though I was 1 point away from getting into a great trade, I didn't chase it. I didn't see any other signals that told me that I should get into the market. So I just let it run. And I was like, look, it's going to be plenty of opportunity all day based on the volatility that we've seen all week. So it makes sense to just kind of sit back and wait for a better opportunity. So if we actually look at this, we can kind of look at this as a trading range. So if we follow prices from this low at 240 and we go all the way up to this high at 360, that pretty much established the range that we traded in within these first, 50 minutes of the day. So notice how every time we got up to this level, we sold off. Now on this one particular occasion, we didn't get all the way up, but we got high enough where you could kind of call that, close enough. It's not perfect, but sometimes it won't be that way. You got to trade what you can get and trade what you see. So we had a range, not a perfect range, but a tradable range. So once we got back up to the top, I'm like, all right, we should sell off. So my strategy is, when you're in a trading range, once you break back into it after a false break to the upside, all you need to see is one lower high and then start looking to place your short trades based on those previous levels of resistance only after that lower high gets established, because that confirms to you that the breakout to the upside was indeed a false breakout. So we initially got that first level right here, but I didn't take that trade because I wasn't quite sure if prices were going to find some support right here. So I said, let me wait for a little bit more confirmation. Now, as prices came back into the bottom of the zone, I had my order up here at, I think this was 288, but they eventually really just came back to test the top of the zone, which it makes sense. But in a day like this, I didn't want to put my order there because I felt like the volatility was so strong that you could definitely see prices come back and test this level. And if you look at the fact that we also, if we follow it across, it lines up with a major doji that came after a very large candle to the upside. And if you keep following it, it lines up with other levels that were major levels of resistance. So I'm like, look, if I'm going to short it, I want to short it from there because I feel like that's the best price. But sometimes you don't get the best price that you want, but the market still makes sense. So once I saw it come back and test the top of the zone, I said, okay, the downtrend is still legit. We had our lower high right here, and then this was our next lower high, the second one at the top of the zone. So we hit the top of the zone, we sold off all the way back down to retest this previous higher low, shot down through it a little bit, but then pulled back, came back to retest this level of resistance that we established before. So I'm seeing all of these levels of resistance get hit, and I'm like, okay, I see what the market is doing. I need to find a way to participate at one of these lows, because that's what I'm looking for. I'm looking for prices to come back, retest the previous low, which should act as resistance, and then as soon as I see prices move away, that's when I want to get in for the short trades. So I'm just patiently waiting as prices are moving and moving. We see this large candle to the downside. Now, this large candle was very important. Now, when you're looking back on the screenshot, you can't really tell the significance of this candle because it closed towards its low. But during the process when this candle was forming, it found a nice little level of demand around 186 and then pushed up for a good little minute. But it eventually ended up closing on its lows towards like the 170, 160 level. So even though it's not apparently present that 186 is the level to short from, I still use that as a reference point because I'm like, okay, that's where the demand came in. So I just wanted to see what this one candle would do. And let's go back to the live chart for a second. When I saw that this one candle came all the way back up to a high of 188, and then the next one came back up to a high of 187, that gave me confirmation that that 186 level was important, because even though I saw the demand come in, I was like, if it didn't close right there, is it still as significant as I think? And the answer is yes. But notice how I didn't just jump into my trade just assuming that that level would hold up. I waited for confirmation for the market to show me that yes, that 186 level was important, and that's when I ended up entering a short trade at number 2. So if we read the notes, I went short here as prices came back to retest a previous level of resistance. That's what I've been doing all day. We've been in a downtrend, so that's really all I'm looking for. So this was a pretty good entry, and I was looking to take it all the way back down to yesterday's closing price, because I'm figuring in this moment that if the downtrend is this strong and we've already broken past a major range, it makes sense for us to come back and retest yesterday's closing price. So it's like, okay, if I see where we're going, it's just a matter of finding the best entry to get in there. So that was my mindset at trade number 2. But unfortunately, this trade did come back to stop me out at break even on the very next candle, which was okay. You know, I was like, look, if we actually break back down below this major swing low and we come back to retest it, I will take that short trade. And that's pretty much exactly what I did at 3. So I shorted here as prices came back to retest the low, and I exited once we got back down to yesterday's closing price. And after that, I decided to call it a day. I know if we look at the chart, we can see that the market still has some pretty good moves to the downside. We came all the way back down to 34,075. So we had about, what, 25 plus 31, that's what, 56. We had about 56 more points of downside. I could have caught something, but one thing I can say about the market is that you got to have structure, not in terms of like market price action, but I mean structure in terms of the way you want to trade and the way you want to actually attack the market. So me, I like to have a starting point and I like to have a finishing point. My starting point is pretty much the same every day. It's going to be 9:30 a.m. when the market opens, but the ending point is always different. You know, if you're trading in a very strong trend and you finally get to a major level, for me, that's where I like to call it, because I'm like, okay, I saw where the market was trying to go, and then I just tried to participate until we got there. And once we got there, it's like, all right, we made it. Anything that happens after this is not really my concern. So I feel like I made some good trades today, and overall, I would say this is what I want to aim for when it comes to working my trading plan. Everything that I did today was perfectly aligned with my trading plan. I looked to go short during downtrends from major levels of resistance. There was not one time today that I shorted from lower prices and made that mistake, because I've been making that mistake for the past 2-3 weeks very consistently. So I think I did a good job of just being patient, and that's what it came down to. It was so many opportunities today for me to participate, but I only waited for the best possible entry that I could find based on what I was looking for. So I think overall that's a very good day for me, and I want to continue doing this going forward into the future. So this weekend I want to work on definitely continuing to be patient. I want to hop on the back tester and work on taking the best possible entries. I think a lot of times when the market is moving, I get too excited and start trying to take trade after trade. But I think it would be better to either, one, wait for your best opportunities and take your scalp trades when you get there, or two, what I'm really starting to think about is taking your trades at really good levels and then just holding the trade until you see the market characteristics change. So if you hop in for a short, you should hold that short trade until you hit a major level of support down below, or until you see a higher low get formed. Other than that, you just got to stay in the trade. So that's something that I'm thinking about and working on, but I also realize that that's pretty much going to be a strategy that should only be used on high volatility days. So that's important too, but that's something I definitely want to work on this weekend also. And that's pretty much all I got for today, man. I hope you guys learned a lot about trading downtrends, being patient, and waiting for prices to come back and retest previous lows that should now, once they were support but got broken through, should now act as resistance. And once you see those price levels being moved away from, that's where you take the short trade. So I hope you learned something about that today. I hope you learned a little bit about being patient, and I hope you learned a little bit about maybe potentially holding your trades for those bigger moves. So I appreciate you guys for tuning in with me today. Make sure you go hard this weekend. Get your studying in. Come back on Monday as better traders. and I'll see you on August 28th. But until then, you guys, have a good weekend. Take it easy.